a bit more on the corporate side, because that would mean more investment, which is obviously a prelude to continued recovery going forward.
Thank you. And the next question goes to Marta Villar of Negocios TV. Marta, please.
Thank you very much. For President Lagarde, in the last press conference, you said that there was a strong likelihood we were in a dialing back process. Would you say this likelihood is stronger now? And for the Vice President, what is your view on the current absence of a new governor in the Bank of Spain? Do you see us getting to September with no appointment yet? Thank you very much.
Well, on your first question of the strong likelihood of dialing back, we clearly dialed back in June, and that's when we decided the 25 basis points cut. As you have noted, on the occasion of this monetary policy governing council, we decided to hold the three rates because, of the reason that I've mentioned.
Welcome to Forex.Today.
On that disinflationary track, at the same time, the domestic price pressures remain high, and the interconnection between wage, profit, and productivity can really constitute uncertainty around that path. So it's the story of on the one hand, on the other hand, which leads us to not make any decision on the occasion of this meeting. And for future meetings, it will be a matter of observing the data, analyzing the data, and determining whether or not we are reinforced in our confidence that we are on the path. Mr. Vice President, you have the rest of the question.
Good afternoon. Well, today the Banco de España was represented by the Deputy Governor of the Banco de España, Margarita Delgado, and I would even say that well represented by Margarita Delgado. She made her points, and it was part of the unanimous decision that the President referred to. With respect to the future, the election of the Governor of Banco de España is a prerogative of the Spanish government, and they have indicated very clearly that before the next meeting they will appoint someone there. Hopefully, I hope that we will have a new governor of Banco de España before our next meeting, but it's the prerogative of the government. The only thing that here, we recommend, that's something that we recommend for all the governors, is that they have to be knowledgeable in terms of economics, finance, banking, and I hope that that will be the case again.
Thank you. And the next question goes to Santi Piñol of Market News International. Santi, please.
Good afternoon.
Good afternoon.
President Lagarde. Two questions. My first question is on growth. If it's becoming more of a concern for the Governing Council, and it seems that it could enter into your process. And the second is, we are in summer, and indeed it's a season of lots of reading. I wanted to ask you if in your summer reading list, would you include the 2021 strategy review to refresh the thoughts of what to do in the next round? And what are the areas that are likely to be revisited for the next one? Thank you very much.
Well, thank you so much to take care of my summer reading. I think I might do a lot of reading stories during the summer for my grandchildren rather than dive into very substantive reading as you suggested, but I'll come to that question later. So growth is obviously something that we look at carefully, and we certainly observe that we have recovery. It's a recovery that is led by services, supported by what we call the virtuous circle between higher employment in services and consumption of services. I remind you that service production was up 0.7% above Q1 level. That was the number in April. The service PMI remains expansionary, a tad lower than where it was, but still very expansionary. And the total employment in services has also significantly contributed to the increase of employment in Q1. So services is definitely leading the way. It's clear that on the manufacturing side, it's not the case, and manufacturing has actually declined in the last few months. And the other aspect, which we are also looking at very carefully, because it helps to have a forward-looking vision, is the level of investment. And investment remains weak, driven also by the tight financing conditions. and by the uncertainty experienced by the corporate. But we have recovery, and we will continue to observe carefully where it is coming from. Suffice to say at this point that it is service-driven, not manufacturing-driven, and that investment could certainly be stronger going forward. The other element which I pointed to earlier on is this issue of exports. And I think that this is also a domain that we will look very carefully at to see how the numbers are faring going forward, and in particular, what is the competitive position of the European Union and the euro area relative to other economic nations, in particular China. So to come back to your question, which is really, what are you going to do with the strategy review? So it is not a strategy review. Let's be clear on that. It's an assessment of our strategy review. The strategy review that we conducted back in 2020, 2021 was a massive exercise that we conducted after, I forgot whether it was 14 or 18 years of no strategy and no strategy review. So it required that we really, as I said at the time, we turned every stone and we looked at everything that we use, that we decide, how we decide it, how we communicate it, and we will assess what has been achieved, where we have been short, where we can improve, and that will be not the lengthy process that we had, but a shorter process. It will start reasonably soon, and you should expect outcome in the second half of 25. And we have deliberately excluded any discussion concerning the symmetric 2% medium term, so the inflation target will not be debated.
Jumbo.
It can be debated, in the future by a future president of the ECB, but not on my watch. And the other item that also we will exclude is the discussion of the dot plots, given the experience that some of my colleagues have had of this element.
Thank you. And the last question goes to Anna Karismo of the Finnish daily Yle. Anna, please.
The Finnish Broadcasting Company. Thank you for the opportunity. The inflation is running at very different paces in different EU countries. For instance, in Finland and in Italy, the annual rate is under 1%. And actually, we would need a rate cut. So isn't it a problem, or how big a problem is it for the ECB's council that for some countries the rates are too high, and that actually we would need a rate cut for growth?
Well, thank you for your question, but that is the beauty of the euro area. It's the beauty of Europe, but particularly the euro area, because we are a monetary union and we are 20 different fiscal jurisdictions. As a result of which we have discrepancy or disparity, if you will, between some countries and others. It was the case exactly in the other direction at the time when inflation ran very high, where you had Nordic countries or Baltic countries, where inflation was hitting in the 20 plus, when the average was much lower, and the peak on a euro consolidated basis was 10.6. So this is the reality that we have, and we have to deal with it. I have to tell you that each and every governor, when he or she walks in the governing council room, is a member of
When
the
she
governing council
walks,
and not the
she
representative
talks.
of his or her
Who?
country.
Oh,
I'm not
she
suggesting that it's not
walks.
in the back of their mind, because of course they come from there, they return there, and they are very much aware of the reality of their economy, but they also know that we are making decisions for the euro area at large, and we cannot make specific decisions that would be nationally and member state based.
Thank you. That brings our press conference to an end. We will be back here on September 12th. And up until
So I'm
then,
just marking
we
my
wish you a good
charts.
summer. Thank you very much.
And hope a good break and some vacation for many of you.
Yeah, see? I live in America and we don't take vacations. Yes. All right, so markets are opening, a little drop in some places, but setups in many. Very cool, very interesting. Let me go vert here. Okay. Dow acting bullishly. Let's go to a 15 on these other ones so we have time congruency. Okay. Yeah. There's some little buying zones. They're all sort of in buying zones. Lots of potential risk, in particular on the NASDAQ, in turning into a head and shoulders. That's the part I'm worried about. It's not totally unexpected either, right? I mean, we've been talking about it for quite some time, but actually having it develop, is interesting to see. Like, it hasn't happened yet, but okay, it could. And so what you want to watch, like this zone, is you want to watch this move should not become more than a 618. If it does, this goes from retracement to potential reversal. And gosh darn it, we are close to that. I mean, oh my God. It's almost like it has to go up today, or you need to be prepared for a NASDAQ reversal over the course of the next few weeks. Yeah. I know, right? Like, yeah, yesterday was a big deal. So better giddy on up. Okay. And then with Dow's just, it's a better technical setup. That's all. That's a basic setup. Okay. Looking at the daily pivots, looking at the daily moving averages, looking at price action. But my problem with this chart is it's way overpriced. It's extremely overpriced. It's rarely this overvalued. So it's a difficult one. Yeah. Okay. Yeah. Okay. But it is moving. And we are riding a 5 EMA. Yeah. Yeah. Oh, for sure. Okay. Yeah. Okay. You probably watched me do this, but I'll zoom back in. Okay. You see what I did? Real body close and wick low. Okay. This is the roll reversal for price action traders. That's what I do all day, every day. Green zone or daily pivots, that's where you buy. The target for day trading is up here. But we're way extended over weeklies and monthlies and ugly trading. I don't like being this far out. Yeah, that's all. But anyways, that's the stock market open. Bitcoin's been doing nothing as of late, but right now it's below 65. I do not like that, Sam. I am. We were higher, closer to 66. We tickled 66 and then we dropped. So I'm waiting. I'm waiting for that EMA to catch up on the daily. We can zoom in a little bit and take a look at the 4H. Waiting for this to catch up. Not quite there yet. Been eyeballing the roll reversal, and we're kind of extreme mediocrity. I am trying to be patient. I am trying to be disciplined. But oh, it's difficult. Yeah. Okay. And that's not looking good. Come on, Bubba. Come on, Bubba. Yeah. Oh, look at this on the hourly. Toit. But that does not look good. Yuck. So, hang on. I probably have to bail on that trade. No, actually, I'm doing all right. All right, cool. I mean, look at that. Are you going to take it down? How many people here trade crypto? Well, I do hold Bitcoin and Ethereum as unique. They are not random, in my opinion, Jordan, but many others could be more so, depending on your level of expertise. All right, but anyways, as you can see, wowzer, huh? On the short time frame, that looks very bearish. Let's check some things. Would you consider this zone important? It's plausible, huh? That's exactly the price we're at now. Zoom in a little bit, or a lot actually. And you can see very often top, lower low, lower high. That makes us vulnerable in this section, technically. Remember, I'm just doing technical analysis, right? I can't let go of it now. There we go. Right, you see what I mean? Like there's some vulnerability there, right? So if you are a bear, I don't know what you are, and I don't know what I am. So I can't influence you. Okay? I'm not a social influencer. I'm a male model. There is a difference. In this case, look, if you were going to be a lower high guy, that's where it would probably present itself, huh? Don't you think that that's a pretty decent possibility? Notice it's a full Monty. We drop to the M1 and return to the M3. How interesting is that, huh? So this is already an August play. Do you see it? It's saying 65,300 is the top. And the bottom is $52,541. Okay? That's what an August bear would do. 65 to 53, let's say. And that's just a range, actually, isn't it? It's just a complete reversal of everything we just did. Okay, do you see that vulnerability? My morning routine. Yeah, first thing I look at, I do my fundamentals. Yeah. Yeah, I do all my fundamentals first. Okay, I actually cover that, excuse me, in the Quant Box presentation. Have you seen that, Richard? Where I introduce Quant Box? I literally go over 20 years ago, 20-something years ago, 22 years ago, what I did before I even looked at charts. And I still have that process, but... Okay. I never look at the charts first. Charts are just for executing a trade. I don't care about news either. I care about fundamentals. News adds volatility. Okay. So, like, I need to figure out what the ECB told us. It sounded like no interest rate cuts for a year. One and done is what it smells like. What do you think? Okay. So anyways, I might have to bail on my Bitcoin and today. Yeah. Yeah. Do you think the Fed's one and done? I don't know. Well, I think they'll cut until gasoline prices go back up. but that might be next year. So like that's 2. Yeah, Richard. Yeah, but I know that. Do I look at it in a daily routine? You could. Okay, you could, but no, I know it. Like, I just know it. So I pay attention. But like, now with QuantBox, we track hot money as well as long-term treasuries. We do short-term treasuries. We look at trends in the short-term treasury yield market, like, which incorporates that information, right, Richard? So with the Fed Watch tool, there's a relationship. And so, yeah, so like in my daily routine, yeah, I know all that. Yeah, I'd say the most important or maybe interesting part of my daily routine, my morning routine, as you asked, I wake up and I meditate. And a lot, at least a half an hour. And I've been doing that as long as I've been a Forex trader. Do, 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 do. Okay, so we're holding up on crude. It's a big question now. Are you going to buy a dip? Yeah, there's 2 prices, a plan A and a plan B. I thought you were making a statement, not a question. No, well, if a central bank is cutting while there's high inflation, well, that doesn't make any sense, right? Now, if there's a continuous disinflation, they could. But I want everyone to step back right now, okay? And realize what we have going on is extremely abnormal. So you have to study history and study lessons and study monetary policy. Why does a central bank normally cut? And by normal, I mean every time except now. Because we're going into recession, or we've already gone into recession. We're nowhere near that. So why are central banks cutting? Because we are restrictive, because we had very unusual inflation, one created by a distorted supply-demand equation, right? And the printing of money, as Ray Dalio says, right? This is weird. We don't usually have a global pandemic. So we're cutting interest rates when things are good. It doesn't make any sense. Okay? So normally what happens is the central bank cuts interest rates and the dollar gets strong. Now, people will fiercely argue with me over this, but I know they're wrong, so it doesn't matter. They're not going to hurt my feelings. Do you think Einstein felt bad when everybody told him he was wrong? No, I'm not like Einstein. But anyways, look, normally the economy is crashing. Okay? And unemployment is skyrocketing. And consumer spending and GDP, all of it is crashing. That's bad. Dollar gets strong. Meanwhile, the central bank slashes interest rates. So that should be good, right? Well, they're slashing it because things are bad. It doesn't change until the central bank stops slashing interest rates, because things are starting to improve. Okay. And the dollar strength goes away. Now, I've made like massive declarations on like one afternoon because one simple thing happened. I said, okay, stop buying the dollar, sell all of it. Has anyone been around when I've made these declarations that I've been looking for a certain aha moment? And the second we got it, I said, stop and reverse everything. Stop doing what we've been doing every day for 6 months and do the opposite. Has anyone been around for any of those? There have been several over the years. But this time is different because we're cutting interest rates. Yes, unemployment's going up, but a little bit. Okay? The last one I remember was the day Jay Powell said that they were not going to consider negative interest rates. And I'm like, that's it. They're done. Sell the dollar. Sell it all. Everything you accumulated over 6 months, sell it all. And keep doing it for years. I think I said keep doing it for 2 years. Yeah. So anyways, but look, the normal rules don't apply because this is all government intervention created. So maybe you could argue government intervention by the central bank and by the central government to save people's lives during COVID. And you're like, okay, that's what they did. Okay, but it is an intervention. And there are negative consequences, and we are suffering them, the negative consequences. Okay, so interest rates are unusually high right now relative to economic performance. That's what the central banks mean by restrictive. You heard the ECB say it today, that their policy stance is restrictive. Okay? So like for example, in the United States, let's say on average, interest rates are usually 1% higher than inflation. That's not quite true. That's not precisely accurate. But let's just go with it. That interest rates should be a little higher than inflation so that inflation never really goes up. Okay? Cool. What's the inflation level in the United States? Let's call it 3.0. So what should interest rates be? 4.0. What are interest rates now? 5.25 to 5.5. So the Fed could cut 1.5% and it would get back to a normal policy rate, a neutral policy rate. Quantbox has all this information. It's mapped out. It's all there, projected 18 months into the future, meeting by meeting by meeting. We've known all of this. We have it all quantitative. It's all quantitatively mapped out, literally charted, graphed, It's a graph. So 1.5 gets us down to 4.0. Okay, and that would be the neutral zone. 4.0 would be higher than 2 to 3. So in fact, if things continued to improve in the future, they could lower it probably closer to 3.5. And let's say inflation stays around 2.5. Okay, great, good. But that's too far out. That's a couple of years ahead. All of this is already known. But now the response to interest rate cuts has historically been dollar strength, but that's because the economy was going to negative GDP, negative inflation, okay? But that's not what we have. It's a normalization. And if many of our post-COVID problems have been solved, so maybe the opposite's true, dollar gets weak and the stock market rallies. But don't get used to that being the norm. That is not the norm. Okay. Now, Mikhail says wants to buy the Chinese stock market. Okay. Well, you can do that through Trader's Way, of course. Let's go to stocks. Okay, so I recommended a buy in January. I actually held this and then something happened. I accidentally closed it while coaching. I was really bummed out. So Mikhail, okay, this was the time. Oops, let's do this in black. Okay, so you're already 6-7 months late. Okay, but nonetheless, now what? Things to pay attention to. Okay. So you might be right. It might be soon for yet another chance. Okay. But, okay, I'm just trying to get this to line up properly. It's fighting me a little bit. I can't see the, here it is. All right. Yeah, I realize I have to update that. Okay. And then we'll do this one. Sorry, it's hard to see the tools after they've been drawn for so long. So from the double bottom, I got that. Then I got to grab this. No, still won't let me. Where's the other? Oh, it's way up there. Okay. Let me do it again. Pull it back. And then put that up to, there we go. All right. So yes, you could consider this price. Okay. The next price is quite a bit lower and is probably based on a time frame like that. So it's a maybe now, okay? So now what you do is you mark this, okay, and you watch it on a smaller time frame. But I think what I would do if I were me is I'd wait for a trap and break. Because I don't like the 2155 cross, all that kind of stuff. So we have some price action that might be helpful. But the price could be significantly lower before it goes back up. Okay. So maybe wait for the Trump rhetoric to stop. So like tonight is the last day of the RNC. So give it some time to cool off, because remember, if the market expects Trump to win, then that means Chinese tariffs, and that means down. Well, do it fundamentally first. Like, things have changed since my January recommendation, right? But you're like, there was a buy there last week. Where? What time frame are you talking about? I mean, on the daily chart, there's nothing there. I mean, how are you playing this? Inverse head and shoulders? Are you just doing a pattern? I mean, the Chinese data is really bad. Industrial production, inflation, retail sales, GDP. It's all bad right now. And then again, if you think, or not you, if market participants or if many market participants are pricing in a Trump victory, then they're pricing in Chinese tariffs, and that would be terrible for this investment. So imagine tonight, Mikhail, at around 11 p.m. New York time. Okay, 10:30, 11. It might be closer to 11. Donald J. Trump is likely to come out and in his speech he will it's likely that he says China's bad, they're the real enemy, Russia's a distraction, and that he'll end the war quickly in the Ukraine, and then he will impose 60% tariffs across the board on all Chinese goods. Is that going to be good for the Chinese stock market? That they just lost their biggest customer? You think that's going to help profits go up? Industrial production go up? Job growth go up? Real estate prices to go back up? You think all that's good? So I'd be very careful. Yeah, I am very careful. So that I didn't have on my radar back in January, but I did make this call. I did position the trade once or twice. Okay. And it was a double bottom back then. So I'd be careful now and at least wait. Okay. At least wait for the RNC to be over if you're going to do it. Okay. But what's the consequence to Americans if Trump wins and does a trade war with China? Tariffs. What's the consequence of tariffs? Is it possible? Okay. Yeah, a consequence. Yeah. Is it possible? No, it is the consequence. Okay. Unless you put a tariff on a country that charges higher prices than everybody else, and that's why you're doing business. But that doesn't make sense, right? Usually you you do trade with countries that can do things cheaper. So now if you are in sort of some sort of trade war with them, then those low prices go away. It's not really that prices go up. It's that you've lost your lower prices and you have to find a substitute. Okay? So in America, we do not have Chinese electric cars. In Europe, they do. So what's the consequence of that? Well, your choice is European EVs or American EVs. But you don't have any cheap Chinese cars. You don't have a NIO, a BYD, that kind of stuff. Okay. So you lose access to the lower price. But you could just buy a Honda or a Toyota that gets 45. I was driving my wife's BMW. My daughter said, "Oh, it'd be, wouldn't it be fun if I had fireworks at my birthday party?" So later that day, without her knowing it, I jumped in my wife's car and I drove to Alabama to buy fireworks. What a good daddy, huh? She literally almost cried when she's like, "Where'd you get these?" I'm like, "I drove to Alabama." And she's like, "When?" And I said, "Today. After you said it'd be great, wouldn't it be cool if you had fireworks?" So I drove to Alabama. And she just broke up. So anyways, I'm driving to Alabama. My wife's Beamer, gasoline, and the thing got 42 miles to the gallon. An SUV. Now, yeah, the SUV you can put in your pocket, but nonetheless, it's the size of a gummy bear. Crazy though, huh? So why do you need a Tesla if you can get 42 miles to the gallon? So you make an alternative. Right. And so at that point, so it's not, I guess I'll go back to Adam's, possible. There's a substitution that needs to get made. But the substitution rarely ends up in something cheaper, right? So it's more like raising prices on a foreign good is an increase in price. That's what the tariff is. It's a tax. But instead of taxing you, they're taxing the manufacturer to say, well, if you're going to bring it into the country, it's going to cost 60% more than it otherwise would. So that's what I'm getting to. Like the actual definition is prices will go up, but in reality, there's a substitution. So, for example, if how about this? If France imposed an export tax, I guess I have to stick with the same theme. Okay, if the United States put a tariff on French wine, and French wine costs 50% more, so your Chateauneuf de Pape, or your Chateau Latour, right? Chateau Mouillon, right? If these things cost 50% more, what do? You find something similar from a different source. Now, maybe you buy some Spanish wine. Maybe you buy some Italian wine. Maybe you just buy from Napa. So, the weird thing is, there's always a cause and effect. And this is, by the way, this is where you're going to make a boatload of money. Being able to sit and think and contemplate. Because in the media, they'll just say, it's a tax on American consumers, prices are going to go up. Well, if it's that simple, then you'll end up buying gold. This is what I'm trying to get to. But how do you make the bigger money? Well, you can invest into Spanish wine. You can invest into American wine. Maybe imports of Chilean wine double. Imports of Australian wine double. So, if you normally drink a French Bordeaux, it could be replaced by an Argentine what the hell is it called? I don't typically drink it because it's basically Merlot. Why can't I think of it? Argentine Malbec. Okay, just get some Malbec from Argentina. You can probably get it cheaper anyways. Okay, so if you can figure that kind of stuff out, you know, if Malbec imports double because you can't get French wine, you should start doing that now. So if Trump wins and there are 60% tariffs on Chinese goods, on all Chinese goods, who's going to benefit? Who's going to be hurt? Now, is China going to benefit? Probably not. Do you probably want to invest in the Chinese stock market? I don't know. Probably not. The recovery could end. Okay, the recovery trade I made 6 months ago. And now we have new information. So, all right. So maybe that trade is dead or over. We don't know. But then if Trump does win, what's for 2025, China maybe is hurt, but who's going to be the benefit? The beneficiary. Where does the money go if you can't bring that in? Is it an American company? Is it a different company? Right? A company from a different, are we going to just import more from Europe? Does it even change anything? You're like, oh, well, tariffs are high. I guess I'll buy a BMW now. No, you were going to buy a BMW anyways. Maybe Vietnam, maybe Honduras. Depends on the goods, right? But so like nearshoring, right? For example, so Mexican peso could be one. But who is hurt? Well, if China is seriously shut down by this trade war, are they going to buy stuff from Australia? Are they going to buy stuff from Canada? No, but we're already selling this. That play is already happening. This is why you need QuantBox. You should already know that. Like when you look at, let's do these ones. Okay, look, dude, look at New Zealand dollar. Look at Australian dollar. It's already in play. This has been happening for weeks now. Okay? So is this going to bounce and head up higher, or is it going to head lower? That's what fundamentals are about. You're asking a technical question about fundamentals. Well, let's talk it through. Okay? Trump wins. Trump raises tariffs on China. Australian dollar comes down. And Kiwi dollar comes down. And CAD. Oh, look at CAD. Boom, 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 boom. Okay? So we now know the losers, but who's the beneficiaries? Well, see, this is what your job is. Okay? This is what your job is. Yeah. And you have all the tools. Even just, my setup here on the Trader's Way platform. Cool. Right on. China gets 60% tariffs. Chinese goods get more expensive. How does that impact Japan? More competitive with China or less competitive with China? Well, so that's not a great one, Jordan, because in the United States, we can't buy Chinese cars anyways. Okay? But TVs, laptops, yada, 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 okay, suddenly become more competitive. Like COVID was weird, right? I think this is a decent example. During COVID, I put people in my community to work. So I did lots of projects around my house, hundreds of thousands of dollars of projects around the house to keep workers working. One of the things we did was build a deck. Not the big deck, but nonetheless. Normally, wood, like lumber, is quite cheap. And the expensive stuff is what we call timber tech. Basically, plastic wood that never needs to be painted. But it's 3 times more expensive, at least. So if you're building a giant deck, your budget's got to be massive if you're going to use this timber deck stuff. A lot more, at least 300% more money than just doing it out of lumber like a normal deck. So I did the timber tech one. Now, why would I spend 300% more? Vanity? Maybe. Because I never have to paint it and I'm inherently lazy? Yeah, probably. But what about the financial decision? Well, because of COVID, wood was the same price as timber tech. Now, it's not that timber tech came down because there was all this supply. No one was doing it anyways because most people don't have that kind of money. But then, because of COVID and supply chain shortages, there was just no wood. There was no lumber at the lumber yard. But they had this timber tech stuff that people weren't buying. So if you wanted to buy wood, it was the same price as timber tech. Yeah, 300% increase in prices. So I bought the timber tech. Now, that's normal supply and demand. But what if it was government that for whatever reason said, we don't want you to use wood because we want to save the trees? Okay, so they put a 300% tariff on it, or in this case, a tax. It ends up being the same thing. So it raises the price out of your pocket. You don't really care if it's the price or the price plus tax. Just all you know is they cost the same. And you're like, well, this timber tech stuff is awesome because I never have to paint it. Yeah. Boom. Okay. And so Chinese and Japanese products will be the same, or maybe Japanese products even become cheaper than Chinese. Then you move towards Japanese products, assuming quality is reasonably the same, right? Yeah. Peace on earth, may the pips be